So it's been around 1 week. I didn't post any video because I had some personal issues. So looking at the markets, even though RBI governor, new RBI governor Sanjay Malhotra coming out and decreasing the interest rate in the last since 2020, they have not decreased the interest rate. Now they have decreased the interest rate. Even though they have decreased the interest rate, markets are coming down. FIs are huge sellers today also. Now I am shooting this video at around 3 o'clock, and I am sure end of the day FIs would be net sellers, which they are doing for the very long time, for a very long time, right? Now, why do they sell when interest rates are high? See, you say interest rates are low. Interest rates are low means borrowing cost should also be very low. Eventually, economy has to grow. But why FIIs are selling is because if you see the swaps, India's 10-year bond yield has increased from around 6.17 to around 6.25 or 6.30%. So they may think that this whatever interest rate high or inflation whatever they are telling is not real, and this interest rate whatever decrease in interest rate may not sustain is what I believe. So end of the day we will come to know whether FIIs are net sellers. I'm sure today they will be net sellers. Now this is the point one. And now looking at the charts, if you can see this chart, there are lots of things happening in this chart, and don't get confused. I'll just explain what is happening in terms of SMC or smart money concept. Now you can see equal highs EQH here. Now this is very very dangerous. Why we say this is very very dangerous? EQH means equal high. Now what is happening is liquidity engineering is happening. Now there is every possibility for the market to go on the higher side. In fact, we have added huge long position on the on the higher side. We expect that the market to go at around 23,500 or let's say 23,600 is what we are expecting around this level. Maybe tomorrow or day after tomorrow, or we have 2 or 3 days left for expiry. We expect that the market will go to around 23,500 or let's say 23,600 levels. Now, why should the market go to around 23,500 or let's say 23,600 level is the main question. Now you have to understand smart money concept or market makers, what market makers are doing, what HNIs are doing, what hedge funds are doing, or what institutions are doing. Now they want a liquidity grab. Now let's say they have 23,500 call option is selling at 50 rupees, or let's say for 55 rupees. They have sold huge order at around, they have a huge sell order at around 23,500. There is a huge block order at 23,500 levels, right? They want the market to go on the higher side so that they can execute their order at around 23,500 levels when the strike price is at around 55 rupees or 60 rupees, right? Now if you can understand smart money, now they want liquidity. Unlike retail traders, they cannot they are not going to place 10 lots or 50 lots or 100 lots. Maybe they will place 50,000 or they will slice 50,000 or 100,000, something like that. Now in order to place huge orders, big orders, they need liquidity, right? They need liquidity. Let's say they don't have liquidity, and if they are placing orders, their orders will not go through. That is what I can tell you. To give you a hindsight, let us say for example FIIs are having a let's say they have sliced 100,000 orders for around let's say 55 rupees or 50 rupees. Since there are no buyers, what they will do, they will push the market on the higher side till 23,500, so that 23,500 CE option is trading for 55 rupees or 65 rupees or even 70 rupees. So what will happen is EQH means equal high. I've told that that is where many retailers, that is around 23,500 is where huge orders are placed by retailers. Let it be option sellers or let it be option sellers. Now let us see in option sellers perspective. Since you are an option seller and this is a multiple psychological level, which means 23,500 has been hit many times and it has reversed, means retailers think that it market might not go above 23,500. Now you would have shorted 23,500 and you would have kept a stop loss above 23,500. Now what they will do is they will intentionally move the market to around 23,500. You will keep a stop loss above 23,500. Once it market breaches 23,500 or moves above 23,500, two things will happen. As an option seller, you will think, okay, market is going to go up. You will have to, your stop loss will be hit and you will be forced to buy back your orders. Now this is an option seller's perspective. So you are giving liquidity by keeping a stop loss or stop hunt is happening, right? Now second thing is what buyers will think is maybe this is a breakout or maybe whatever happening is a breakout and they will place a buy order here at around 23,500. So this is an option buyer's perspective. So both liquidity for option sellers, a stop loss will hit at around 23,500, and for buyers they will put a maybe they will think there is going to be a big breakout and market may go to 23,700, so they will place huge buy orders. Both option sellers orders and option buyers order will be observed at around 23,500, which is already existing at this levels, which is EQH, equal highs. So this is a liquidity engineering, or this is called liquidity grab. And once this there might be a fake breakout, and once this breakout is done, the market eventually will come on the downside. So if you are going to go long in the market, of course you can go long in the market. If you can see here, they are adding huge long position. I wouldn't be surprised if the market moves on the higher side tomorrow, or we are having a gap up tomorrow, is what I expect in terms of Nifty. And we expect that they need a liquidity grab, and they will slowly pump the market to around 23,500 or 23,600, or hypothetically saying 23,700, and from there they might bring the market on the downside. So time still is not around 3 p.m. Maybe they will take the market to around maybe around after 3 p.m. they will move the market on the higher side till 23,500, and from there they might bring the market on the downside. So this is my perspective. That is why we have added huge long to our position. Now if you ask me what is going to be the range for this week, we expect today's low is at around somewhere around 23,300 to 23,500 is what we expect. Another, today's Monday, Tuesday, Wednesday, Thursday, 3 more days is left for expiry, Nifty expiry, and India VIX is also jumped by around 6%, almost 6%. So be careful. Whatever happening is a liquidity trap or liquidity engineering. They will for sure take the market on the higher side. Smart money will take the market on the higher side, and they will bring the market down at around 23,500 is what we are expecting in terms of today's price action, is what I can say, right? So apart from that, if you see Banknifty is also one index where there is not lots of liquidity. Let me go to the Banknifty chart so that you can understand. I'm not sure if you are trading Banknifty or not, but Bank Nifty is one index where many people have stopped trading. So you can see here also they have added huge orders here. They will pump it till around 50,250. And when you think the market is going as an option seller, if you think that the market is not going to go above 50,200 or let's say 50,300, it is for sure going to take this, and there is going to be a liquidity grab here, and there might be a fake breakout and the market may come on the downside is what we are expecting. So in terms of Bank Nifty, we are expecting somewhere around 49,850 to around 50,250 levels is what we are expecting in terms of Bank Nifty. And in terms of Nifty, we are expecting somewhere around maybe 23,000, today's level of around 23,300 to around maybe around 23,000 500 is what we are expecting, or 23,600. Now what will happen tomorrow is this change of character will happen. Now this SOCH means a change of character, which means bullish pattern, change of reversal will happen. Now if you see BOS, what does this mean is break of structure, which means whatever trend, whether it is a downtrend or whether it is uptrend, it is very strong. Now if I am right, there should be a COCH change of character here, which is a trend reversal at around this area, or at around 23,400 levels. Then we might go on the higher side is what we are expecting in terms of Nifty and in terms of Bank Nifty, right? So in case if you are of course there is a disclaimer, if you want to be long in this market, I'm sure you can go long in this market now. And if you want to short the market at around 23,500. Whatever I told might be very complex, or you might think is very complex, but you don't have to worry about the complexity. All you have to do is a delta neutral strategy and just park your emotions outside so that you will make some good money. Don't worry, it is not going to go anywhere between 23,300 on the downside and 23,500 or 600 on the higher side in terms of Nifty, and Bank Nifty 49,800 to maybe not 49,000, sorry. In terms of Bank Nifty, I can tell you 49,900 to maybe even maybe 50, around 50,250 is what we expect in terms of Bank Nifty, right? So take some non-directional strategies so that you will make money in this market. And this is what we expect in terms of Nifty and Bank Nifty for this week. So does this mean it will happen? It might not happen, because this is all whatever we are saying is hypothesis, right? So it may happen, it may not happen. So there is a strong disclaimer. If it happens, we will make money. If it doesn't happen, we will have to manage our position. What else we can do? Markets are market. We cannot change, or we cannot control it. All we can do is how we control our strategies, right? So I'll end this video here. I've been talking for almost 15 minutes. I'll see you in yet another video, tomorrow's video. Till then, take care. Bye.